So today I'm going to share with you how to structure a QLA deal with a bad credit. And you definitely want to stay until the end because I'm going to show you how you can do QLA and buy businesses even if you have a bad credit. So stick with me until the end. So hey, if you're new to this channel, my name is Moran Pober and I'm here to share my journey in buying businesses. I'm also the founder of Acquisitions.com. So the first thing to understand is that there's a personal credit versus business credit, right? And most people don't understand that when they buy a business, they have their credit and they have a business credit, right? The same way that you own assets, perhaps you have a house, perhaps that house is registered in you, which is probably not the best idea, but it's not this topic of this video. But perhaps you have a house registered on your name. Perhaps you have other things that you have on your name, right? Those are your assets. Same for a business. A business got their own assets, and the same for a business, they got their own credit based on their history and the way that the business is being traded over the last many years or whatever the time it's been out there. Now, after you understand those basic fundamentals, that there's personal credit and there's a business credit, right? Now you need to understand when you're going out there and looking to do a QLA deal, especially if you're looking to buy an existing business, you're most likely, or not, I mean, most of the chances is that at least as part of your process, you're going to talk to financial institutions. Now that financial institutions or private individual or a normal bank, he will potentially give you money. Now it's true that that's the way for him to make money, by giving you money and get paid some interest, right? At the same time, you need to understand that that investor need to cover himself as much as possible, right? That investor, that bank, whoever you talk to get money from you. Now, when a potential bank is looking at you, is also looking at the business. So the first criteria for the deal is the business. When he's looking at the business, he's going to look at the assets. So let's take one example, right? One of the different ways that I'm teaching my clients are go out there and look for asset-based lenders, right? It means that you're going to a bank and tell them, hey bank, I'm looking to buy this business. How much can you loan me against the assets of this business, right? Now, a bank will first look at the business. He will look at the assets, he will look at the business cash flow, he will look at the management team, he will look at whatever he can to justify the loan to you. So think about, put yourself in the shoes of the banker. If you were him, would you also try to figure out personal credit of the buyer, perhaps what other assets they have, perhaps what amount of cash flow they have that we can perhaps bring to the deal as well? Of course, I mean, he's trying to de-risk himself as much as possible. Now, your job as the business buyer, as the investor, is to position yourself well enough so that banker or investor won't ask for those things. And it's definitely possible. My clients are doing that all the time. That's what I've been doing and that's what I'm sharing my clients on how to do that. And just to summarize in a nutshell, how do you do that? It's all about your positioning and your authority and the way that you speak. It's the words that you're saying and how you're saying them that will determine on if and how much you'll be part of the deal, or if and how much that bank will just use the business assets as collateral. Because think about it, logically, all they need is just the business assets. Because if worst case scenario happens for the bank and the business shuts down, you need to bankrupt or file bankruptcy and shut down the business, right? The bank got a first say on the assets. So he could liquidate those assets and get back at least a very nice chunk of his loan. So why do you also need your personal credit? You don't, but he's just trying to cover his ass somehow as well. And it's your job to know how to make it so he won't use your personal credit at all, and he will only look at the business credit. And it's not your business that you already own, although obviously that's a bonus if you have, but no, he's going to look at the business target that you're looking to buy, again, if you know how to position yourself the right way. So in the end of the day, you always need to put yourself in the shoes of the other person. The banker is looking to make money and is looking to cover his downside. And if I were in his shoes, I would do the same. If I would give money to someone, I would make sure that my downside is as minimal as possible. There's a nice saying that I like, which is heads you win, tail, you don't lose much. That's the way that the bank is looking at things, and that's the way that you should look at things as well. And in the end of the day, it comes down to numbers game. You need to talk to enough financial institutions and partners and practice so you will know how to position yourself well if you have the right words and the right positioning on how to put yourself in front of those banks. So I hope that makes sense. If you really want to dive in and understand a little bit more about the process, you can watch this case study that I've done here. Go and watch it right now, and I'll see you there.